an LLC was really designed to be a limited liability vehicle in the same way that a corporation can be, but without a lot of the corporate C corp problems that we'll get into, or perceived problems, as the case may be. But interestingly, you can do kind of whatever you want with an LLC, and I think a lot of people don't appreciate this. Generally, an LLC is taxed as a pass-through entity, which is what I say here, meaning it's for tax purposes, it's treated as if it doesn't exist.
That means
right? So
whatever money your company makes passes right onto the individual. Right?
Straight up to whoever owns the LLC. And if there's another LLC there, it passes through. So you see stacks and layers, and it eventually just goes up as if none of those LLCs exist until it hits someone that's a taxable entity. Correct. Now, interestingly, an LLC can be a taxable entity if you elect for it to be that. So you can elect for your LLC to be taxed like a corporation, but generally the default is that an LLC is a pass-through entity. It gets disregarded for tax purposes, and it just moves up to whoever the member of the LLC is.
Yeah, beautiful. Let's go to this next one here. If you stack multiple LLCs in your structure, they are all disregarded up until you get to a taxable entity.
That's right. So like I was just mentioning, if an LLC is disregarded and you have an LLC owning another LLC, that bottom layer operating company gets disregarded, and it's as if its income was recognized or earned by the LLC up here. Well, that LLC is also disregarded. So that goes away, and it immediately pushes up again. So it can go as many layers of disregarded entities as you want to until it hits somebody or something, someone that's taxable. That could be you as a person. That could be a C corp. It could be, we'll get to S corps in a minute. But that's what happens if you stack these in your structure.
Is there any industries that do that a lot and say, hey, I don't want to create an S corp or C corp, just stack a whole bunch of LLCs?
Yeah, I mean, it's really common in corporate structures where they want everything to flow through up to their taxable entity. So if you look at like a lot of public companies, for example, they'll have pretty complex structures and webs of subsidiaries down below. A lot of times those are pass-through entities. Now, it gets complicated when you start talking about international and outside of the US and blocker entities and things that are way beyond the scope of this thread or this podcast.
Yeah.
But yeah, it's a pretty common strategy, because what the LLC does, and I mentioned this in the previous tweet we moved on from, is it's designed to limit the liability of the members of that LLC. So liabilities get isolated in that entity, but for tax purposes, it's as if it doesn't exist. So that entity doesn't pay corporate tax.
Yeah, that's so exposure to lawsuits. You sue the corporation, which is the LLC entity, not the individual that is part of the LLC.
That's generally correct. And so that's why it becomes popular, and you'll see these complex webs of LLCs, is because from a liability protection perspective, it can be very helpful, even if you don't want to be paying income tax at every one of those levels. So it lets you create this complex web, but all of the income flows up to one point, and you would pay one layer of tax, whether that's, again, you personally, a C corp at the top, or whatever you want.
Thanks for watching this video. Make sure you're a subscriber by clicking on this button right here down below. And if you want to watch more serial acquirer interviews, click on this button right here. If you're ready to buy your first business, get my course at dealflowsystem.net right here. Take care. Cheers, John.